Market Mindset, AI, Flames, Finance, and Future Risks. Welcome to Market Mindset AI, where we break down the stories that move markets and shape industries. I'm your host, Big Money Mike, here to bring you today's top financial insights with a splash of market spice. On the agenda today, after a day off the market for Jimmy Carter's funeral, the economic fallout from California's wildfires, how insurance companies are grappling with billion-dollar losses, and what this means for the broader market. We're also zooming out to explore the state of the economy, inflation, and what experts are forecasting for 2025. So whether you're sipping on coffee or crunching numbers, let's dive in. Segment 1. In our first story, we're talking about the LA wildfires, one of California's most costly disasters in recent history. While the human toll is immeasurable, the financial implications are staggering. JP Morgan estimates insured losses could climb as high as $20 billion. Insurance companies are feeling the heat. Mercury MCY saw its stock plummet nearly 17%, while Allstate, ALL, Travelers, Parv, and Chubb CB all posted losses ranging from 2% to 4%. Analysts predict these losses will reshape how insurers approach risk in California. Expect higher premiums and tighter underwriting standards in the years to come. Utility companies weren't spared either. Southern California Edison, EIX, dropped 13%, despite stating its equipment wasn't responsible for sparking the fires. Meanwhile, Pacific Gas and Electric, PCG, infamous for its wildfire-related bankruptcy in 2019, lost more than 8% of its value. The bigger question is, how does the market adapt to disasters like this becoming more frequent? Companies in construction, materials, and renewable energy may see a silver lining in rebuilding efforts and preventive technologies. Segment 2. Economic Whirlwinds. Let's shift gears to inflation and market risks for 2025. Consumer inflation expectations have hit their highest point since 2008, with Americans anticipating a 3.3% rise in prices over the next year. This surge comes amid fears of potential tariffs from the incoming administration, adding uncertainty to an already delicate economic environment. The University of Michigan's Sentiment Index dropped to 73.2, reflecting growing unease among consumers. Interestingly, nearly one-third of respondents mentioned tariffs as a key concern, a significant jump from just 2% before the last election. What does this mean for markets? Wall Street is divided. While some analysts see room for growth driven by earnings, others warn of a potential correction. Goldman Sachs highlighted three main risks: high valuations, market concentration in mega-cap tech stocks, and limited room for upside following 2 years of stellar gains. Segment 3. Future-proofing finance. In our final segment, let's look at how businesses and investors can brace for what's ahead. The financial impact of natural disasters like the LA wildfires is a wake-up call for insurers and policymakers alike. Climate change isn't just an environmental issue, it's an economic one. Expect to see increased investments in renewable energy, disaster-resistant infrastructure, and innovative insurance models. Meanwhile, the broader market faces its own challenges. With high valuations and concentrated gains in stocks like Nvidia, Amazon, and Alphabet, diversification is more critical than ever. Don't put all your eggs or tech stocks in one basket. And for the inflation hawks out there, the Fed's next moves could shape market sentiment in the months ahead. While rate cuts seem unlikely in the short term, a prolonged pause might give markets the stability they need. That's it for today's episode of Market Mindset AI. From wildfires to inflation, the market is full of challenges, but also opportunities. Stay curious, stay informed, and as always, stay in the mindset. This is Big Money Mike signing off. Catch you next time. This content is not financial advice, and it is a summary of news articles which was produced by AI.